Welcome to Groundbreakers, a podcast about real estate development. I am your host, Nick Stilo, and my co-host, Joe Villar.
Welcome, everyone.
All right, so this is a good one, guys. Across Canada, in November of 2024, there is over 70% of Canadians are going to have a mortgage renewal. Now, before I get to my point, what do you think will happen, Nick?
I think the market's going to tank
Okay, you better tell me why.
because these renewals are coming up on mortgages that were initially signed at sub 2% rates, and now they're going to almost quadruple. Today's prime rate is 7.2%.
Ooh, God Lord.
So if that renewal happens today, and they were on a 2% mortgage from 5 years ago, that just went up 4 times, almost.
And the average mortgage is 600,000 plus.
That's right.
Joe, what do you think?
I disagree. I don't think
Oh.
the market will tank. I think that because there's still a great disparity between supply and demand, I think the market will, if stay the same, if not continue to increase. You're right. A lot of people will be going into higher rate mortgages, but they have options. They can always re-amortize their
Yeah,
mortgage,
okay.
extend that mortgage term.
But how is that
to
good?
try to keep? That's not saying it's good or bad. I'm just saying people have options.
Okay.
So
At
just
that
add
time of
more debt
renewal,
because you can't afford your current debt.
That's true.
But at the end of the day, it comes down to your monthly payment. That's what it comes down to. And that's how people guide themselves. They guide themselves on their monthly payment and how they live their lives based on that mortgage, that monthly mortgage payment.
So what does this mean on the interest rate? What are people going to expect to pay now if they were at 2%?
Well, let's assume that somebody has $1 million home and they've got a $600,000 mortgage, and their mortgage was based on a 2% interest rate from 5 years ago, and they renew at 7%, then their mortgage is going to double.
That's heavy every month.
Yeah.
So you're looking at an additional $24,000 a year, based roughly 400,000.
So
Holy
that's a
jeez.
domino effect because now people stop eating out, people stop buying.
No.
Maybe they don't stop. Maybe they
don't
slow
stop.
down.
They don't slow down either. Okay, so Joe, so you guys have said your point.
Yeah.
Here's what I think will happen. Okay. Come November, our interest rate's going to go up or down. Maybe they're still going to keep going down. So they're going to jump on a 1-year mortgage, maybe even a variable. But they are going to ask for some money out of their home, of the equity. So now you're right. Now the mortgage goes up, but they have the money to pay for it. So here's what I think is going to
they're
happen.
Getting into more debt to pay
Correct.
their debt.
Exactly.
How's that
here's-
good?
Because everyone is now confused and almost confirming that, no. Let me just get 1 more year mortgage, and I know that the interest rates will go down. Let me pull out the money from my equity, and let me continue 1 more year. Now, in that 1 year, what's really going to happen? It'll go down maybe a 0.5%, maybe. So that's what's going to happen, in my opinion. Now, in 2025 November, that's when I think the real big problem is going to hit.
Yeah.
Not now.
Yeah.
Because now everybody's just going to kind of, they're not peeling off the Band-Aid yet. It's just kind of a little. Is it okay? My cut is still okay. Let's wait a little bit longer. Right? Don't you agree with that?
I told you, I think it's going to tank.
No, but define tank. I think tank is a very strong word.
Home values are going to drop.
Home values will drop. What do you mean?
Because as people can't afford their mortgages, they're going to try to sell. There's going to be a lot of supply. It's going to be a buyer's market. And in order to move that product, they're going to have to drop their price. And it's going to happen across multiple sales.
But there's a lot of buyers right now waiting on the sideline. So it's not like there's going to be all of a sudden 300,000 homes and 100 buyers. That it's still going to be more buyers than homes available. So will it tank? I don't think it'll tank. Maybe it'll regulate. Because right now, even the prices now are still going nuts. You still need $1 million for a semi-detached at 1,500 square feet in Brampton. So tanking, you're saying that all of a sudden the fundamental structure of our housing bubble is going to burst. Is that what you're saying?
No?
Yeah, you are. That's what tanking is.
Well, don't hear what I'm not saying.
I'm just curious because from your stance, Joe, is, I think we'll be all right as long as they refinance.
That's correct.
And I agree.
Yeah.
You're saying that if they choose to refinance, which might be the only option, they're now getting into more debt to pay off the debt.
Mm-hmm.
But isn't it the 2025 year that now we're in trouble? Because right now, a lot of people have equity in their home. So don't you think it's next year that's going to be a problem?
I don't know an answer for you.
So this is one of the most asked questions on your Instagram is what do you think is going to happen with housing in the next coming years?
God only knows. I don't know.
No one's got a crystal
I'm
ball,
happy
right?
to admit that I don't know.
But we have a general idea, guys.
Yeah.
Because the mortgages right now
Yeah.
are the ones that are setting the bar for everything. Now, when it drops in June,
It will not drop in
it
June.
will drop in June.
It will not drop.
You
in
don't
June.
think that it's not going to go down 25%?
No. I think that's wishful thinking, to be honest with you.
Whoa. Nick,
I-
do you agree with this?
Yep.
You don't think it's going to drop either?
I don't think it's going to drop.
Nope.
Said it in the last episode.
Nope. And you know what?
That's no good.
I'm hoping it'll stay where it's at.
Oh,
That's supposed to go
no.
up.
You're going to have a lot of hate mail for this, man.
Yeah. Yeah.
Why
I know.
hate mail? This is our opinion.
No, did you say go up? No, it can't go up.
Well, that's
It'll
what he said.
be an
Hopes it
economic
doesn't go up.
collapse.
I'm hoping it stays the same. That's what I said.
But why though?
Why?
No one's buying right now. Why?
No one's buying. What do you mean by no one's buying?
So a lot of people are still waiting with the trigger. They're waiting to shoot it off, like the starting pistol,
Yeah.
because
Yeah.
of this quarter of a point.
Yeah.
If
Yeah.
that doesn't happen,
Yeah.
the summer,
Yeah.
it's flatlined.
Well, we just talked about inflation a moment ago, right?
Correct.
That's what the Bank of Canada relies on when they're deciding on interest rates. So if the inflation numbers do not go down, they're not going to be touching that rate.
But I thought it was going down.
And in my opinion, inflation is not going down.
Might be going up.
It might be going up. Okay.
Wow.
Again,
You heard it here first.
contributing factors for inflation are cost of goods, i.e., fuel, food, cost of homes, interest rate. These are the three major factors in determining inflation, and all those indicators, to me, appear that they're not going down. If not, they're going in the opposite direction. They're going up.
You agree, Nick?
We're in a global inflation battle right now.
A global inflation battle.
Mm-hmm.
Really? Guys,
Financial Post posted it this morning. Canada among nations fighting rising rent in global inflation battle. Rapidly rising housing costs are preventing inflation from declining closer to central banks' targeted levels.
okay, so what they're saying is, as of 2024 to 2026, they're looking at at least $150,000 increase. Now, guys, you tell me now, if people are okay, so their mortgages are coming up in November. A lot of them are going to say, "I got to sell." They're going to sell. They're going to move in with their parents, or they're going to refinance. Now, those people that decide to sell and move in with their parents, there's all this cash, right? There's all this cash. What are they going to do with this cash if every year housing is going to go up?
That's why I don't think it's a smart move to get out of the market. I think it's better to stay in the market.
Not everybody's going to have that choice.
I know that. But if you have the choice, I think it's better for you to stay in the market or get into the market as opposed to be out of the market. Because the longer you stay out of the market, the worse it's going to get, I think, in my opinion, going forward.
What do you think, Nick? You're very pro. I don't know, man. You're a little doom and gloom when it comes to this. Why?
I don't know. I just am.
So you know you guys are going against all realtors, right? All realtors are saying heavily in June is when everything starts to decrease.
Yeah, they said that in May is when it's going to increase.
They-
in the spring,
they need
is
to
when
create
it's gonna
optimism,
increase.
obviously,
they need to create
right?
Buzz so that
Yeah, absolutely.
their buyers come out of the woodwork.
Okay, so they're trying to stimulate their own
They're
little
trying
market.
to stimulate. And I don't blame them. I understand that. They're trying to create optimism.
Now, let's assume they do go down. Let's assume it does go down a quarter of a point. Do you feel that this is going to be a positive for our economy or a negative?
Positive.
You think it's going to be a positive? How so?
Well, because it'll now create confidence in the market.
Mm-hmm.
It'll create stability in the market. Right now, there's instability. Right now, there's not a lot of confidence as to where things are right now. So once there's confidence, that's when the economy starts moving again.
But do you think we're a little bit foolish, maybe almost donkey-like, because we're assuming that this quarter point is going to make a drastic difference, but it really won't? It really won't make a difference, let's be honest. Couple $100.
Psychologically,
Oh, psychologically, sure.
psychologically, I think it will make a difference to people
Okay.
in that sense. Yeah. Again, if I feel that rates are going to go down and I see optimism in that, I'm going to make, decisions based on that. Right. So
Okay, so guys, ending off this episode, I want to talk about how does this affect you guys as builders? If it does go down a quarter point, does this have any influence on you, your cash flow, how you build, everything?
For construction costs, it does.
sure.
Okay, so
We don't sell condos; we build apartments. So
you
for us, we continue building.
now a lot
Right
of
now.
people say that you're getting a special reduced rate.
No.
You're getting the current market rate.
Yep.
You guys don't get incentives,
Nope.
really?
Not unless we're in certain programs like ACLP or MLI Select with CMHC, but there's also a lot of concessions to that.
So the second it drops a quarter point for you guys, it's huge actually because you're
Absolutely.
borrowing
Yes.
millions upon millions of dollars.
Yes.
That's right.
Wow. So ultimately, as a business, is there anything different that you're going to do if it drops a quarter point, or are you
No,
going to
that
just go
stays in.
business as usual?
No, that stays in the budget. We don't take it out.
Oh, really?
We
Yeah.
we move that money somewhere else. We'll end up spending it somewhere else.
But it's still within the company, like it's
It's still within the project.
within the project. Really? But you guys are not accounting for it, right? You're going to assume it may or may not happen. It's not like you have it in the budget as
That's
a
right.
as a maybe
That's right.
it'll happen.
That's right.
When you guys budgeted this, when did you actually start the Old Bronte project? Like,
Our first budget
yeah,
for Old Bronte
Yeah.
would have been like 2018. Our very first budget would have been a condo budget back in
Yeah,
2018.
I guess so. Yeah.
Yeah. And then as an apartment in 2019.
So then your budget fell through.
No,
through a
because you're
hole.
constantly updating your budget.
Oh, but then how are you borrowing more? You know what I mean? Like,
Because you borrow at the time that you pull your permit. You borrow at the time where most of your costs are fixed.
But how are they allowing you to continuously update your borrowing? Like if they
Well,
say this is
we
how
don't
much you're
borrow
allowed.
more
Okay,
through the
so-
course of the construction.
Oh.
We borrow a fixed amount at the start of
Okay.
construction, and we are chipping away at that loan as
Okay.
we construct. So the more we build in that project, the less that we have to chip away at.
So to answer your question, if we were to start construction and rates were to go up during the
Exactly.
construction process,
Exactly.
then we would have to come up with a difference in that.
That's what I meant.
That's an
And in this
additional
business, we
cost.
call it a cash call.
Yeah.
Now, that's what I was talking
Yeah.
about. So,
Yeah. So-
obviously you have a big amount of money that you're
Yeah.
going to be chipping away as you're building. But what about if all of a sudden the interest rates go up like they did?
So there's a thing called a contingency,
Okay.
right? Where we set aside a certain amount of money
Okay.
for situations like interest rate fluctuations or where certain things come through at the construction that weren't anticipated for. So you have a contingency for that to help offset that. But again, that's a forecast. So sometimes that contingency doesn't meet what actually happens on the construction site.
And even still, in our case with CMHC, we have to maintain 3% contingency of cost to complete throughout the life of the construction. So
Wow.
even if there is a cash call and we did have contingency dollars, we still have to maintain 3% in that contingency right to the very end.
What do you mean you have to maintain it?
So if the cost to complete is $10 million, we need to maintain $300,000 at a minimum
Why?
in that,
Why?
because that's what CMHC requires us to do.
So what happens with it after the project is done?
If there's anything left, then
Which usually there isn't,
There
because
isn't. But if there's anything left, then it's cash back to you at the end.
Really?
But there was not anything left. In fact, we've put money in.
Wow, guys, there's no way. To be a builder, you have to. Is it easy being a builder?
No, otherwise a lot more people would do it.
That's very true.
We're deal junkies. Is what
How's-
we are.
what do you mean?
We like chasing deals. We like
But
negotiating.
there is
We
no
like,
negotiations
We like the
when it
grind.
comes to
We like
this,
the
though.
grind. Of course, there's negotiation.
With the bank?
Negotiating with for sure.
Really?
A couple of bips here or there will make a difference on your loan. You're negotiating your rate. You're negotiating your fee.
Oh,
You're
I see what you're
negotiating your
saying.
contracts for your construction trades.
Do you also have to give the banks a this is our start, this is our end? Like, do they require that?
What do you mean?
When giving you a loan that large, do they say, all right, what's your project timeline like?
Yeah, of
course
course.
they
They
do.
want to see cash flow projections. They want to see how much is going to be coming out every month, how much construction you're going to be completing every month. And
They want a
you
report.
project a schedule out and tell them this is how much we're going to need for the next 4 years in construction or 3 years in construction, and this is how much we're projecting to spend every month, and that number increases as you get closer to the end.
The bank wants to get in and get out.
Get in and get
Right?
out. Exactly.
Get in, get their interest money, and get out.
Exactly.
That's what they want.
That's what they want. You know what else we want? We want to get in with the emails and contacts and get out so they can go and follow us. Nick, at your camera, where can they follow us?
oneurban.ca, info at oneurban.ca, or at oneurban.ca.
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 And as always, Nick, how do we close off every episode?
Oh, I forget. Thanks, everybody.
See you next time.